closing bell 4 minutes away. And yes, a different picture, certainly from this time yesterday, right? We've got the Dow up 287, S&P better by 34. Nice move for the NASDAQ, up 172. Remember, though, it fell more than 400 points yesterday. Russell 2000, biggest percentage gainer here, up 1.6% or 39 points. Golly gee whiz, shares of Alphabet are rising on reports that its $32 billion bid for cybersecurity firm Wiz has cleared a U.S. antitrust review. The deal, according to Reuters, would integrate Wiz into Google's cloud unit, enhancing its cybersecurity solutions. Alphabet shares hit a record high of $291 last week after it reported blowout earnings. Right now, trading at $284. Is now the time to pick up shares. Joining us now, Simplify Asset Management Portfolio Manager and Chief Strategist Michael Green, with more than $11 billion in assets under management. Michael, something tells me you like this stock.
Well, ultimately, what I like about it is its representation within the NASDAQ and the S&P 500. As I've indicated, I think the single most important thing for people to understand is that the bid that is coming through from the flow of funds into index funds is causing stocks like Google to receive extraordinary order flow that's driving them higher. Things like the acquisition, the ability to return to M&A and signing deals with Apple, et cetera, which are all in defiance of the earlier findings from the FTC on antitrust legislation. This is just telling you that the conditions that are currently in place are likely to continue. And so it's very hard to bet against a stock that is getting the sort of support this is from everyday Americans plowing money into their 401ks.
So the two other names you like are also very much in the megatech space, and that would be Avago, which is now Broadcom, and Oracle. Are you not spooked at all? Were you part of the crowd yesterday who started thinking, maybe the valuations are getting too rich on some of these names?
Oh, I want to be completely clear. I think the valuations are totally insane. At the same time, it doesn't matter because the structure of an index is going to reward a stock that's trading at a very high valuation, increasing the relative size of an order. When you buy $1,000 worth of the S&P 500, you're sending more and more of it to these companies. That's creating distortive effects. It's causing their price to rise. It has almost nothing to do with fundamentals.
So I shouldn't be nervous when I hear you say none of that matters?
You should be very nervous, but you should also understand the game that is being played at this point.
Okay, so don't fight the momentum. Certainly there's more room to run. Overall, as we look at the markets, you feeling comfortable that this excitement over AI can continue?
Well, again, I think the excitement over AI is an amplification mechanism. It causes additional buyers to come in alongside the passive bid. But the simple reality is the most important story here is the actual behavior that we're seeing from people who are just buying the S&P.
Okay, so really quickly, I'm so interested to hear what signs you will look for that indicate to you that the momentum is going to change and move in the opposite direction.
Well, I think one of them obviously is the momentum itself, but the much more important one is I pay very, very close attention to the flows that are coming into products like the Vanguard ETFs and mutual funds. These are largely being directed from entities like target date funds, which are really just tied to employment. So perversely, this means that the equity markets, the stock market, is no longer a leading indicator.
I see.
It's now largely tied to the employment bid, which means it's a lagging indicator. So my guess is we'll see the economics deteriorate long before. Yeah, go ahead.
Okay. Michael Green, can't wait to see how that one turns out. We appreciate it.